Morning, everybody. It's 8 o'clock. Welcome to the regular meeting of the Kirkwood Meadows Public Utility District. And we'll start out with roll call.
Sure. Rickard?
Here.
Smith?
Here.
Epstein?
Here.
Dornbrook here, and O'Grady.
Here.
Okay.
Full board.
Thank you very much. And the board will notice the Valentine's Day colors on the presentations for today. Do you have additional announcements?
I do. Welcome to the Kirkwood Meadows Public Utility regular meeting. The district would like to welcome the member of the public that we have today, Judy Flynn. This meeting is being fed live over the internet, and the public can view this meeting by going to www.kmpud.com and following the appropriate link. If the public would like to make a comment or ask a question, please email msharp@kmpud.com and the board will respond. I'll ask that the members of the public and staff identify yourselves when making comments. And that's all I have today.
Okay. Well, given that, is there any comments from the audience? Okay, seeing none, we'll move on to any corrections to the agenda or the consent calendar. They're all good? Okay. So the next item is adoption of the consent calendar. Is there any discussion on it? Yes.
Just move adoption of the consent calendar.
Okay. Been moved. Second.
I'll second it.
Okay. All in favor?
Aye.
Opposed? No. Okay. Consent calendar passes unanimously. And now there's no items brought forward. So first item 8A, discussion and possible action regarding the district's financials. So we'll ask Kelly to come up.
That was quick.
Yes, you have to be ready at all times.
Good morning.
Morning.
We'll go ahead and start with the balance sheet on page 34 of your packet. Starting with the continuing note on the restricted balance, this will remain over budget due to the Melrose Trust of $473,000 that is not budgeted for. We will correct that in the upcoming budget so that any balances that we do have on our balance sheet will have a budget for them. Moving down to total reserve and total trustee special construction. Again, these are both over budget until we make that payment to PG&E, which we've now scheduled to be paid in February. Moving down to total accounts receivable. This is over budget, again, due to consumer AR. We had a total balance consumer AR as of December of $959,000. There's also property tax AR in this number due to the fact that we didn't get our Alpine County property tax payment as previously we thought we would in January, but it's going to be coming in February. Moving down to accrued interest payable. Again, this is a continuing note regarding the budget formula error that will be corrected in the upcoming budget. And total other current liabilities is a direct relation to that PG&E payment that has yet to be made. And that's all I have on the balance sheet, unless there are questions.
Any questions?
Moving on to the combined income statement on page 36 of your packet. You'll notice that other revenue is considerably over budget, and this is due to the posting of our renewable energy credit auction sales of $38,000, and also the transfer of our cash from the 501c3 back into the KVFD account for the purchase of that power gurney. Overall, operating revenues for December we're over budget by $172,000. Salaries and wages for the month of December are over budget, and this is due to holiday bonuses not being budgeted for, as well as snow removal overtime hours for the storm cycles that we had in the month of December. And then the biggest note, you'll notice that there are some odd negative numbers in G&A allocations as well as other revenues. And this is because we reversed all of our property tax allocations that we had made for through calendar year 15. Because we met our tier ratio for calendar year 15, it was at 1.13. We did not need any additional property tax revenue. So we moved the budget as well as any allocations to happen at the end of fiscal year 16. So that will, we'll see that in June. Any property tax revenue that we might need to allocate. And that's all I have on the combined income statement. If there's any questions? Moving right
Everybody
along.
happy?
Yeah.
That's great news.
On to the general fund on page 37 of your packet. Again, salaries and wages are over due to the holiday bonuses. The biggest note on G&A is our operating expenses, and this is mainly the utilities at the CSB and the vehicle maintenance shop were previously being allocated through a percentage out of electric, and we're trying to get closer to a truer picture of what's happening with utilities. So now those utilities for this building and for the vehicle maintenance shop are being directly posted to G&A and then allocated out of G&A. And so our budget showed $3,000 for December, and we posted over 20. So this is just, like I said, it's because of the new way that we're posting utilities for the two buildings. And this is something that we'll be adjusting the budget for in the upcoming budget to reflect the correct way to post these utilities. A quick note on the fire department on page 38. Again, this over budget revenue item is the transfer of the funds from the 501c3 account. Moving on to water on page 41 of your packet. Water revenues were up slightly for the month of December due to the holiday occupancy on the hill. And then again, you'll notice the G&A allocations are over budget and directly relates to those utility postings in the G&A fund. And then overall, total operating for water, you'll see that we are at a loss of $80,000 for year to date, which is $6,600 more than what we budgeted for. So water is at a loss for the year. And we budgeted for a loss, but it's even a higher loss than what we budgeted for. Moving on to wastewater on page 42. Again, wastewater revenues are up for the month of December, and then this is again directly related to holiday occupancy. As far as operating expenses for the wastewater fund, even with the over budget amount in G&A, they did have an overall savings compared to budget of $11,300, which is good. Wastewater, we are operating at a loss of $191,000, but this is better than what our budget is for wastewater by $14,000, almost $15,000 year to date. Moving on to electric on page 44. Electric for the month of December, revenues were up $41,000 compared to budget. Operating expenses in electric were over budget for the month of December, and this is due to the fiber repair that we had to make, RCI expenses, and the big chunk of it is the powerhouse utilities of $16,566. And then again, you'll see that the negative number in other operating revenue is the reversal of our property tax revenue allocation. Total operating for electric, we are at $789,000 to the good, and this is $326,000 better than budget. So electric is having a good first half of the year so far. Moving on to snow removal on page 46. You'll see salaries and wages are over budget, and this is due to the fact we had some good snowstorms in December and lots of snow removal happening, which is a good thing, even though it is over budget. And then operating expenses, again, directly related to trackless repairs during those snowstorm cycles. Total operating for snow removal, we are operating at a loss right now of $26,000, but it is better than budget by almost $5,000. And moving on to propane, again, with revenues and cost of goods sold, revenues are showing better than budget by $99,000, but $105,969 is the propane fuel surcharge, and $109,000 is actual propane fuel expense. So they kind of wash each other out, which is what's supposed to happen in propane. Total operating for propane, we are operating at $50,200, which is better than budget by almost $112,000. So propane is having a good first half of the year as well. And moving on to just a note in solid waste, you'll note that our operations and maintenance are over budget for December, but this is directly related to just more dumps happening, more people on the hill, which again is one of those things that's probably a good thing to have over budget. And that's all I have for income statements, unless there are any questions.
Any questions? Any questions from the audience? Okay.
Okay, moving on to December EBITDA. Just a quick note, as for December, we ended at better than budget by $81,000, and year to date we are operating at $284,000 better than budget. Not at a loss, which is good, but I think we are going to rework this a little bit to show a real cash EBITDA and how it relates. It's something I'm going to work on this month so that we have a clearer picture of where we stand as cash rather than just revenues and operating expenses. Any questions on that? You guys are awesome this morning.
News is good.
And you are.
Oh, thanks.
News is bad, we'll be back.
I'll be sick that day. We wanted to, moving on to propane revenues and cost of goods sold, we wanted to show the three different ways that we have posted this or can post this. Currently, we post revenue at gross, and we post cost of goods sold to include the propane fuel surcharge, which I think in a way overstates revenue and overstates our expense.
Right.
The way we used to do it prior to this fiscal year was a gross revenue posting and then a second negative revenue line item for our propane fuel surcharge, which you see an overstatement of revenue in the commercial and residential line, but it comes out in the net revenue line item at the bottom, and then we show cost of goods just straight as what propane fuel cost is. And then there is a third way that we'd like to post, which is a net revenue posting, leaving the propane fuel surcharge in the revenue line. It shows a truer picture of revenue and a truer picture of cost of goods sold. I do have an email into Moss Adams asking if it's okay to post as a net revenue item, or if they need to see the propane fuel surcharge as a separate line item as we had done in the past. I don't foresee there being an issue with this posting it net, but I just wanted to make sure before we change anything that it's okay to post it as a net line item rather than having it broken out separately.
And this occurs because the propane fuel surcharge is actually negative?
Right, it's a credit on the customer bills.
Right.
Due to the propane fuel cost being so low. Any other questions on that?
Any change we wouldn't do until the new fiscal year.
Moving on then to January preliminaries. Again, this statement, the operating revenues are actuals, expenses are estimates. Unless, of course, we've already posted things that are over budget. I didn't estimate lower. I left them as over. But operating revenues for January, we do show better than budget by $167,000. So another good month, I think, thanks to all this good snow and people coming up the hill. Year to date, operating revenues are showing better than budget for through January of $585,000. So hopefully this continues. We'll get some snow at the end of this month and into March to keep those positive numbers flowing. Moving on to cash waterfall. For January, our actual number in operating cash was $2.2 million. This was a little bit less than budget by $20,000. But some notes about that is we had predicted we were going to get Alpine County property tax revenues in January. We did not. I've called Alpine County, and the checks are supposed to be being mailed on the 11th, so hopefully we'll get that next week. Also, we had, I just completed my bank reconciliations, and there were $256,000 worth of consumer AR that was posted in January, but didn't actually hit the bank until February 1st. So it's a timing issue of, when the actual cash hit the bank. And then just a note on the reserve balance, I show the payment to PG&E. I had moved that to April, but we are actually going to pay that this in February. So you'll see that large payment reflected against the reserve in February rather than April. And on this, our low point is still December of 18, counting on doing the switch stage project still, which hopefully we won't have to do.
So I'd just like to repeat the comment I made at the Finance Committee. It's confusing to me why after three good months of revenues and even washing out the issues of accounts receivable and the delayed tax payment, I don't understand why we're not doing better on cash. And so if I go out to the end of February after current receivables are resolved and current payables are resolved and the property tax payment is received, I don't understand why we're only $118,000 better. It seems to me we should be several hundred thousand, and I know in the Finance Committee, we discussed the transfer of the snow removal depreciation into the capital reserve. But that was budgeted for, at least every document I have says that it was budgeted in the cash flow, in the cash waterfall. So anyway, what Kelly and Michael said that they would provide, research that and provide an explanation. But, you know, I can't get excited about all these great revenues if it's not translating to more cash that we can use for early debt repayments, et cetera, et cetera.
Yeah, staff will join the, we'll make a document that joins the two documents, the cash waterfall, and we're also going to be looking at the budget numbers themselves that we're comparing it to, because I trust the numbers that we're using in the forecast. I want to look at the budgetary numbers to ensure that we're not counting stuff that we possibly might not, should be.
So you trust the cash waterfall more than the budget, is what you're saying?
I don't understand, I haven't looked into the budget to see what we're comparing it against.
That budget line item on the cash waterfall that we compare our actual to.
Right.
We are gonna look and see what's actually in that budget number that we've put there to make sure.
So the cash budget in the cash waterfall.
Right, exactly.
Because all the rest of the numbers are actuals from bank reconciliations, and
Yeah.
payments that we're making. So it's pretty clear how much money we have. We just want to see what we're comparing it to.
Yeah.
And finally, we included the Form 7 that we actually send out to Russ for our calculation of tier ratio. We included it as a separate spreadsheet. Obviously, it wasn't going to translate to a PDF very well. And I just wanted to make a few notes about how the tier ratio is actually calculated. And it's calculated by taking our margin and we add our interest on long-term debt to that number and then divide it by our interest on long-term debt. And that's how we get our tier ratio, and what that number has to add up to is 1.05 for the calendar year. We ended up this year at 1.13, and again, that was, we allocated $650,000 of property tax at the end of last fiscal year. You know, not knowing we were going to have an awesome November and December, we could have allocated a little bit less, but 1.05 to 1.13 isn't that big of a jump. So we felt that was a good number, and that's why we were able to reverse all of the property tax allocations for the first half of the year.
And where did you say the form was? You said it's not in the board book?
It was sent in the board packet from Sandy.
Oh, it's in the board packet.
It was a supplement.
No, it was in the finance packet. We'll send it to you.
Oh, I'm sorry. I thought that.
Well, that's it. Well, I have the finance packet, so
Oh.
it's okay.
It's fascinating reading it. We just spent a long time on it.
I'll start right away.
And that's all I have on the Form 7 and property tax allocations, unless there are any other questions.
Well, going back to the difference in cash versus net income, I heard what you said, Michael, and that's fine. But, you know, if we're $600,000 to $800,000 of net income ahead as of January, and that extends to June, regardless of what we budgeted for the cash, you know, we ought to be $600,000 to $800,000 more in the bank in June, I would think, than last year. So even if there are errors in the budgeted cash for the cash waterfall, I think we need a reconciliation, as we discussed in the Finance Committee, between their net income and...
That's that bridge that I was talking
Mhm.
about.
Right.
Because there's certain things that are...
What I don't want to do is have the answer come back, we misbudgeted the cash balance and the cash waterfall. Eric's point is net income ought to eventually translate to cash, I think. Or not, and if not, then let's just understand why.
Mhm.
That's fair?
Absolutely.
You get what I'm saying?
Absolutely.
Okay.
That's all that I have.
Bob, I have a couple other items on.
Okay.
A couple other things that Kelly put together. Here, once again, is our metered versus budget electrical. And you can see on the bottom line that we've been doing very well against the plan and from last year. And we're up 420,000 kilowatt hours from last year as compared. So I think it's interesting to note that December, even though it was a great solid month, actually was very similar to the previous December. And January, even though it was a solid month, was up 60,000 kilowatt hours from last January, which was in the middle of the drought. And
Is that sold or metered?
Metered. Well, yeah, metered is what we sold.
Metered is sold.
Yeah, it doesn't include any losses. That number doesn't include actual production. That's just metered.
And an extra 60,000 kilowatt hours metered translates to about 30,000 in cash.
And then here, just showing, actually metered for January, you could see that January 2016 was actually the second best January we've had for over the last 5-year period. Doesn't compare to the one in 2013. But I think these numbers are interesting, and we'll continue to present them. And hopefully, February numbers will come out strong. And that's all we have.
You also had an item here on property tax allocation.
That was
did
the
you cover
4-7.
that? Oh, okay.
Mhm.
Got it. Okay, any other questions on the finances? Any from the audience? All right, thank you very much.
Thank you.
Metered means metered at the customer, right? So-
Yes, what we get exactly.
Okay, we move on to item 8B, discussion possible action regarding the formation of the district's 2017 through 2021 budget.
This is the first presentation of the budget to the committees and to the board. I feel we've made good progress and we'll be incorporating comments into the next draft. Today we will review the assumptions, the summary sheets for the 4 major departments and the capital plan. So with that, I'll get started unless there's any questions.
Go ahead.
So I am in the process of rewriting the key assumptions. I want to make it much more like what we're presenting in the budget. So the balance sheet section will tag on to the balance sheet. So this version will be reorganized as we move along. Property taxes are earned over the course of the year. This budget assumes that property taxes will be allocated according to the order that's been established by the district. First, to cover the tier ratio. Second, to cover any cash losses. Third, to fund any capital improvements. And then finally, to build a cash reserve. Property taxes for 2017 are budgeted at $810,000, which represents the average revenue received over the last 3 years. Thereafter, property taxes are increased by 1% annually for the balance of the budget. General and administration, as the board knows, we allocate our G&A to the various departments. We don't anticipate any changes to the way we're allocating G&A expenses. In your packet, you'll see under Russ Loan on page 59, we'll be making some corrections to these charts as far as the fiscal year, and there's some minor changes with the numbers. On number 7, current assets, that just basically shows where our funds are on the asset sheet, where our funds are and where they're collected in our bank accounts. So customer base, this is the number of customers we have, and no increase is anticipated in our customer base for fiscal year 2017. Thereafter, a 0.25% annual increase is forecasted for the balance of the fiscal cycle. So, so we don't know of any projects that are going to come online within the next year, so we're not anticipating an increase. This budget assumes 2 rate adjustments. The first effective on July 1st, 2016 for the electric and propane funds, and it'll have 2 parts. The first would be to standardize the methodology of calculating base rates. At this point, there's no anticipation of an increase in the revenue that's collected from base rates, so it doesn't really impact this budget much. The second is the reduction in the fuel portion of the propane rate. The fuel portion of the propane rate is budgeted to be reduced from the 2016 rate of 5.46 cents per cubic feet to 4 cents per cubic feet for fiscal year 2017. With this change, the total usage rate would go from 7.61 cents to 6.16 cents. Thereafter, the usage rate is forecast to increase 1% annually with the CPI adjustment. The second rating adjustment is for water and wastewater funds. This would be effective on July 1st of 2017, which will increase the base and usage charges for these funds by 4% annually for a period of 3 years to make these departments more self-sufficient. The irrigation revenue line item will also be increased by 4% annually for 3 years, commencing in fiscal year 2018 and subject to the CPI increase. So to summarize, for electric rates, base rates are projected to grow by 1% per year for the assumed CPI increase. The usage rates are set to be reduced each year by 1 cent. Usage rates are set to increase each year by 1% for the assumed CPI increase on the non-depreciation and interest portions of the rate. Meter charges are set to remain at $2.94 for the length of the budget. For propane, they'll have the annual CPI increase for base and usage. Usage rates will be reduced in 2017 due to the reduction in the price of propane, and meter charges are set to remain constant until they're paid off 3 months into fiscal year 2019. Water and wastewater rates will be increased by the CPI increase. Then they will be additionally increased in 2017 by 4%. Meter charges are to remain constant until they are also paid off. And then finally, with irrigation rates are set to increase each year for the CPI, and then set to increase 4% in 2018 to better cover the cost of providing this service. And then meter charges will remain constant until they are paid off at the end of fiscal year 2019. So that is the rates portion of the budget, and I just wanted to open it up if there's any questions.
Yeah, I've got a couple questions and a comment. On the water and wastewater, we had already approved some phased-in increases, right? And we haven't been through all of that yet, have we?
We're into the last cycle of wastewater, actually,
In this.
last year.
Oh, right, that was the last one. So this is another set.
Right. There's no increases set for 2016 or fiscal year 2017, I should call it.
And then the comment that I had was, again, I mentioned this in the finance committee, but on the propane, I can certainly see why the fuel portion would be reduced, because we just want to kind of match. But the budget, as shown, shows us operating at a loss, including depreciation in that department. And it seems to me we should only decrease the overall rate to the extent that we break even.
Yeah, and staff will look at that. We also need to look at some of the operating expenses as well. So it'll be a mixture as we tone this in.
Well, on this rate assumption, I guess a similar question to Eric's. What is not built into? What do we have to get? What do we have to change? What assumptions here are not in our existing rate structure, beside the EDU stuff?
Well, there'd be two rate adjustments, as mentioned. One would be this year, and we would have a public hearing and actually do a rate change in effective July 1st of 2016, which would change the methodology for electric and propane and change the rate for propane.
And the rate for electric down?
No, the
By a penny?
By a penny. And then the 2017 would change the water, wastewater, and then for 2018 would change the irrigation rate. So there will be, rate changes anticipated in this
But
5-year budget.
the other factor in the future would be to evaluate what we actually want to see in the base rate and whether that's being fairly covered and whether we'd want to make any changes. Right? So if we look at propane, the major cost is the infrastructure for it. How much of that should be in the base rate?
Yeah, which is like the wastewater, water charges.
Yeah.
Why would we wait till 18 to change the irrigation rate?
I can get back to you on that. There was actually a reason that I did that, so, but I'll get back to you.
I guess my only other comment is I'd be careful about how low you forecast propane rates, only because, how much lower can things go?
Well, they auto-correct.
Right.
So in some sense, it doesn't matter, but might as well. After 5 years of it being, running below budget, maybe it's time to give it a shot. Right, but
Well, and I know this is just sort of appearances, but it's much nicer to see a credit on your bill than an increase because of fuel surcharge, which is what we used to do for diesel. So, in a sense, I don't want to go so low that all of a sudden we're starting to say, here's your propane charge, and by the way, there's a fuel surcharge in addition to that on the bill.
Well, what I can do is I can get the Finance Committee the past history of our expenses for propane and show how I calculated that 4 cents. I think you'll find that that's very conservative.
Okay.
And probably a realistic approach.
Okay, any other comments on this portion? Any from the audience? Okay.
The next item or area that I think is of major importance is units sold. And in this graph, it basically shows the usage over the last 4 years. Units forecast for fiscal year 2016, the year that we're in, is a combination of our results through December, and then the fiscal year 2016 budget. The reason I did that is that the 2015 year was so poor that it would have lowered all the numbers. So I used a combination of how we've done so far and how we budgeted last year. Units sold for electric for 2017, which is the upcoming budget, are calculated as average sale for each department from 2013 through 16, the last 3 years, plus a 1.5% increase. I feel this gives us a good representation of high and low volume years. For fiscal year 2017, units sold are thereafter increased annually by 1% for 2018 through the end of the budget cycle. Units sold for propane, water, and wastewater use a similar methodology as being the average of the last 3 years for the budget for 2017, and then thereafter they're increased by 1% annually through fiscal year 2021. Irrigation matched the actuals from 2016 as the district anticipates that we will continue to be under a state mandated Water Conservation Act. Units sold are thereafter increased by 1% for the fiscal year 2018 through 21. So that's our units sold. I think it's conservative, but I think it does allow for growth that we're hoping to see. Any questions on units sold? I'll move on to salary and wages. This budget assumes 18 full-time year-round staff as currently employed. We don't see any increases in the number of staff. It anticipates raises in July of 2016 in the amount of approximately 3%. Performance review increases for all staff in December are budgeted at approximately 1%. It is anticipated that 3 temporary snow removal operators will be hired in November of 2016 at a rate of $18 per hour, terminating at the beginning of April the following year. And once again, our allocations for G&A are the same that we've done this last year. Moving on for operating expenses. Operating expenses for fiscal 2017 through 21 are budgeted to increase by 1% annually. There are some increases, however. Storage tank cleaning and maintenance. These are items that we do not feel are capital issues, but are operating expenses that we're adding into the operating expense lines. We've budgeted $4,700 for water storage. Wastewater collection system, our superintendent has given us a sanitary sewer management plan. The first year of the plan is coming up. He needs $17,000 to complete televising, hydroing out, and just trying to find the areas of infiltration. Later in the capital budget, I'll mention that we've also budgeted $10,000 for actual repairs to the collection system, whether that be replacement of lines, pipelining, or whatever that installation is. Snow removal, this is a allocation of $40,000 for the rental of a 950 loader. This would be during a larger year where we feel an extra blade would be very important. What that would do for us is it would allow us our 950 loader to be dedicated to the RPM. So we could have a dedicated large blower and 2 blades on the hill with our trackless fleet. I think that's a shortcoming in our snow removal during busy times, and I think it's a good, we'll also look at the purchase of it, but the nice thing about a rental is that if it doesn't snow, you don't have to rent it, and you can return it early if it stops snowing, and you have that flexibility. The capital expense along with this would only be for the chains, which is like a $5,000 expense. So you're not putting out a lot of money, but you still have the reassurance that you can react in a big year. Many resorts rent loaders for the same reason. In fact, so Vail rents their John Deere loader. Asphalt sealing and repairs. We did not seal our asphalt last year. I don't think we've done it for the last 2 years. I anticipate that with this amount of snow and the contraction in heating that we're going to have some asphalt problems out there, and I'd like to seal every bit of asphalt that the district has. It's an allocation of $30,000. Gatsby compliance, I've put in an allocation of $4,000 to continue that effort. We spent about $2,700 last year. I'll probably reduce that down to the amount that we spent in previous years. And $28,700 is for Out Valley Maintenance Contract Services. This is for Exponential and RCI to continue to provide support. This we did spend, and it is in the numbers that we worked on, so this won't be an additional expense. I did want to point it out, however, as an expense. Other expenses that are in here, the budget assumes that the short-term RUS loan scheduled to mature in 18, 19, and 20 will be refinanced at the scheduled maturity date, and the budget assumes that the switch station will continue to be installed. But we'll get more into that in the capital plan. So this is the first run of the assumptions. I think it's probably the most important document of the budget. It will be rearranged as we have the presentation of the budget finalized, so that it'll track along with the budget. But with that, I take any questions.
Any questions for Michael?
Just my own question, I guess, is for you, Ruth, because I remember last year, you thought it wise, or the finance committee thought it wise, and I thought it was a good recommendation that we budget based on being fairly skeptical about things. Do you think that this is an appropriately skeptical set of assumptions?
That's a really good question. I don't know the answer yet, but I think it is a blend between drought and hope. So I think that's a good question to come back to when we see that numbers aggregated.
Yeah.
Yeah.
Yeah, my overall feeling was that it's still pretty conservative and careful.
Right.
Which I think is appropriate.
Yeah.
And we'll know much more as we go through the budget cycle, and we see the results of this year. We're halfway through the year. It's been great. Let's hope it continues. The next item, if Bob, can I move on?
Just make sure there's no questions from the audience on this one. No, we'll move on. Okay. So we're going on to 8D. Or, I'm sorry, 8C. And was there any other comments from the Finance Committee on
This should be still on budget. I'm on
the capital plan you were on? Sorry.
8B3.
Okay.
So in your packet, and I don't know if you'll be able to read that, is the summary sheets for each of the 4 major departments. So the numbers, the 2 important numbers and the things that I was focusing on in the assumption was the units sold and the rates, and that basically comes up with the revenue numbers. As I mentioned, the operating expenses have been increased by 1%, and you can see what the impact of the assumptions are on the first 4 summary sheets. Electric being the first one with revenues at $4.6 million, expenses with including depreciation of $5 million, and revenues in excess of depreciation, expenses without depreciation at 1.1. This would require a property tax allocation of $470,000 the way we sit right now. And so that a lot of these numbers will change as we hone in, but I wanted to give you a feeling of where we stood. We budgeted last year at $375,000. 2 of the major increases in expenses, of course, depreciation will go up over what we anticipated because the PG&E bill will be paid, and we'll be paying on that throughout. And then, of course, interest expense goes up considerably as well.
Oh, we'll budget for those, right?
Yes, but that's kind of the impact on, and we're budgeting for a penny drop in the rates.
I'm sorry, you said interest expense goes up? I don't understand why that would be.
Just slightly, from
Oh.
1814 to 1854. And that could be just timing because it goes down after that.
Yeah, I don't understand why it would change.
Yeah, we'll look at that.
Okay.
It's a minor.
All right.
So any changes on electric? This does forecast a penny decrease, and everything else.
So,
It rounds to less than a penny, though, right?
Well, there's a CPI increase that increases a portion of the rate, and then there's a penny drop.
I guess I'm not following you because it goes from 68 cents to 67.5 cents.
It's more, I think it's at 6.8. Is it at exactly
683.
6.83 right now? And then you increase that by a percent on a portion of it. You increase it by for the CPI, and then you decrease the entire amount by a penny.
So the net result is 67.5 cents.
So 683 goes down to 67.5, so it's 0.8 of a penny.
Just from an optics viewpoint, the message is if you round, the rates go from 68 cents to 68 cents. Okay.
Well, we could definitely look at it for no CPI increase and having it go from 0.683 to 0.673. It's only,
Yeah, it's.
yeah,
we're
we
in
could
the
change
fourth
that,
decimal
the
place. Yeah.
decimal point, and it's 0.2 of a cent.
So
The only reason why I focus on that at all is because we're so far off from what we were trying to accomplish from, if you back up several years, that putting emphasis on trying to get the rates down still. I think it's an important goal, but I mean, we have to get there from greater sales and savings in debt service.
Yeah, I mean, I like the idea of beginning to, showing that things can come down even a little bit. I mean, I think it's important. But I was also just wondering what is it that's triggering the ability to do that? In other words, I'm not sure, because we're budgeting fewer sales than this year, from 6.6 down to 6.5 million kilowatt hours. Some of our expenses are going up, like depreciation, which means to meet the 1.05 tier ratio, right, we've got to earn more. So the net result is we're using up another $65,000 in property taxes towards this. So it seems like maybe we're just starting to drop rates just because we want to begin to fulfill what our hopes have been, rather than on a rational economic basis. Right?
It could be interpreted that way.
Yes, it could.
The other way, that's true. The other way to possibly interpret this is that for budgeting purposes, we're not assuming a good snow year.
Yeah.
But in terms of the actual allocations we do, we're sort of balancing that out by saying we're trying to get rates down. If it's a good snow year, it was a good bet, and if not, we have the property taxes to cover it. But the real change would be the decision to actually pay off debt in the following year.
Yeah, I mean, I don't know, what does a half a cent mean to revenues? It means $30,000.
Yeah.
No conclusion at this point.
No,
For me.
I just think it's part of the discussion to frame it, because we made the decision several years ago, I don't even know if we is the correct term, but to say that the rates are going to overshoot because we had both systems running. We'd balance that out with property taxes, and then it would be able to lower the rates. And we're still dealing with that.
I would like to see something around 0.67, just from an optical standpoint. And that's just one opinion.
Yeah.
And
It's two opinions.
And look, if it's 0.6751, if you get it to 0.6749, you win, okay? And 0.673 is intellectually honest.
Yeah, I think this .673, if we show the full number in what we are charging today, is a full penny.
Yeah, and I get Eric's point for sure, but I think the consensus is this feels like an average year, not a great year. So it's a little bit of a gamble, but it's not that much of a gamble.
And we can say in the newsletter that the rates dropped by over a penny.
If
Only if
that's true.
somebody looks on their bill and the rate is a penny less. If a portion of it dropped and the other went up, I just don't see that. Okay, I think that's probably,
Good. I have good direction.
We know what we need to talk about when we're ready to decide.
The next one is propane. Once again, the numbers that I've talked about in the assumptions translate directly onto the propane. We will be looking at some of these expenses. I think salary and wages, we need to take a hard look at that, and take a look at the net income loss, as Eric mentioned. But it's a good beginning. At this point, we would be allocating $18,000 or $9,000 to our propane fund.
Yeah, I don't want to lose money on propane.
Well, particularly since we think we may need to buy a new tank, another tank.
Yeah, and one of the things that we're going to do is add the capital projects on for the next 5 years after we've given it a good solid look so that we could see where the cash is going to come from.
Well, I mean, if we're going to get in a tank, I'd love to have at least enough depreciation covered to translate to covering the cost of that tank.
Unless there's any questions, I'll move on to the water. The water summary is on page...
Well, just to repeat, my perspective on propane is, I don't want to lose money, including depreciation.
Understood.
And the base rate's quite low.
Right.
It doesn't reflect any improvement, any planned improvements in the system. So I would suggest that we look to that as the, because a new tank is $60,000 or something of that sort.
The new tank?
Yeah.
200,000.
200,000 or 300,000. Okay. And amortized over 30 years. I mean, if we looked at that and backed that in and added that to the base rate, it might be a reasonable strategy. Yeah.
I mean, we're also looking at putting a shed over it.
Yeah,
and
right.
More security and all that kind of
So if we add that in and look at that as covered by the base rate, that might be a rational to think about.
I think you're going to see a trend of some of the older homeowners in the older subdivision who didn't think that they had access to propane in their homes are looking to upgrade and install propane lines. I've gotten feedback from several homeowners that want to do that. So I see an increase in propane usage.
Oh, okay.
I don't know if that's
good.
relevant at all, but
Yeah.
I definitely don't think we want to lose, we want to at least break.
Because we're only budgeting one new customer a year.
I think we're going to have more.
Okay.
You know, it's just
Right.
feedback I'm going to get.
Yeah.
Meaning people with their own tanks going to the system?
No, people that have never had propane in their homes.
At one time, they encouraged, it was a better deal to do electric than propane. They were encouraging.
That problem's been fixed.
And with changing,
Yeah.
a lot of people would have bought houses that never had propane, and they're looking at their
So they
way
would-
to save money, and they want to.
Yeah, so they replaced their boiler with propane instead of electric.
That's what they're
Yeah.
planning on doing.
Okay. And there's still people that have their own propane tanks, is that true?
I think there are only 2 in the valley, right?
One.
Just
Just
one
one now?
Yeah.
Oh,
So
okay.
that's not really an
Yeah,
issue anymore.
okay.
And the district, we have our own propane tanks as well.
We have
Employee
all of
housing.
them, actually.
Employee housing is actually
Yeah.
a separate tank.
Okay. Good. So
Um,
move on to water.
Yeah, as far as the water fund goes, this once again directly relates. You can see the increase in the rates starting in 2018 and the positive impact that that has on the bottom line. Right now, the property tax allocation would be approximately $25,000 to break that even. And in wastewater, once again, you'll see the increase, the positive impact on the increase, reducing the amount of loss as the years go through, and the property tax allocation of $40,000. So I think these are a good start for the assumptions and summary. I think it kind of connects it together, and we've gotten quite a bit of input on the stuff that I've shown so far. The capital budget, I presented this to all 3 committees, and I can go through that in detail if you'd like. But for the sake of time, I'll just summarize that the new format with the cycle column tied into the capacity plan. So rather than just a number of years, we will have the capacity trigger when the event needs to happen. So like when the demand exceeds the number of units sold, then that would trigger that you're over that 30,000 threshold or whatever it might be. Important projects for 2017 include the wastewater collection system that I mentioned, personal protective gear for firefighters, a powerhouse radiator cover, beginning on that project, the Fremont electric line replacement, which currently goes through a culvert, the Cheriton transformer, a vaporizer shed that Director Dornbrook mentioned, snow removal equipment. We're going to do some work on our 950, and then the asphalt repairs and sealing, which shouldn't be on that list. That's operating. So I think everybody's seen it, and I
Yeah.
sent it to you as well. So
Yes.
unless you want me to go through it,
No, I think,
So I'll just express my, this is my greatest concern of all the budgeting stuff, and that is that we've ignored capital improvements, deferred maintenance in certain ways for 2 years. We're going to have to start spending money to keep things operating properly. And I added up the 5-year total, now includes the switch station. It comes out to be almost $5.8 million over 5 years. I mean, that's roughly $1.25 million a year if we were to do everything that's listed for those 5 years. Where's that money coming from? And if we're not building up cash very rapidly, even with good revenues, and if we're going to allocate more property tax to electric, as indicated, and we're not covering depreciation, as a matter of fact, in water, wastewater, we're less than covering depreciation. Where does the cash come from? And so, I mean, that to me is the puzzle that we should try to solve this budget cycle.
well, if we subtract out the switch station, then it's roughly $3 million.
Yeah, it's about $3 million.
Okay.
which
If we
is-
include the switch station, the money comes from,
Well,
probably
yeah,
from that.
Right.
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 And if we look at $3 million over,
That's $600,000 a year.
yeah. Right.
Right. So I just don't know where it comes from. That's all.
Right. There's only two sources, property taxes or debt.
Or
Rates.
rates.
Yeah.
Or cutting expenses. I mean, who
Yeah.
knows? I mean,
Okay.
it's just something I think we've got to solve, because
Right.
to me, it's not solved. So.
Or volume, but that's unlikely.
Okay.
I noticed Michael left for that particular exchange.
Yes. I don't quite know how to interpret that. Are we, well, why don't, okay, he's back.
I guess the only other comment from the Finance Committee, and I guess it's from me, is I think this is a good progress or place to be in early February
Yeah.
of this year, and I think it's better than prior years from my perspective.
Yeah, thanks to Kelly.
And for those of you who are interested, there's a red line version of the assumptions versus prior year assumptions in the Finance Committee pack. But Michael didn't see the need to torture everybody with that.
Okay. All right, good. I think that completes 8B. So we'll move on to 8C, discussion of possible action regarding the complete a rate study for enterprise services. Michael?
Yes.
Over to you.
At the December 28th board workshop, we discussed two topics. One, to standardize the methodology of calculating base rates for 4 major departments, and two, to review and possibly revise rate strategies established in December of 2018. So the base rate objectives was to standardize the methodology of calculating base rates, to determine what a EDU, equivalent dwelling unit, should be for each department, to answer the question whether EDUs should be calculated based on commercial, a residential unit, or simply based on usage, to confirm that any change to EDU calculations would result in the same revenue as currently collected, but reapportioned based on EDU allocations, and determine what fixed expenses should be covered by base rates. So we've done quite a bit of work on this, and I have a supplement. It's not in the packets. So one for electric and one for propane. It kind of just basic breaks out some of these questions. So currently, our EDU calculations for water and wastewater is that all residential units pay 1 EDU. Commercial units' 3-year usage is divided by average residential units to formulate the number of EDUs for each commercial unit. So the average residential is divided into the commercial usage for a 3-year period, and then we calculate EDUs. That's for water and wastewater. For electric and propane, 1 EDU per meter, even if it has large usage or many units connected to it. So that in the case of a mountain club, 1 meter, it has 40 units connected to it. It pays 1 electric base rate. In water, it pays many it pays 40 base rates in water because it's residential units. So 3 scenarios are shown, and I'll start with water. One is the current, one is using only residential usage, similar to water and wastewater, and one is using total usage to formulate an EDU. And here are the assumptions that are used. That no increase in revenue is on this. So we took that out of the equation. Usage above 1 EDU is calculated at 1 decimal point, 1/10. So you could pay 1.1 EDUs, 1.4 EDUs, etc. And there's no distinction between commercial and residential. This is all based on usage. So going through the chart, you could see that the total number of EDUs today is 768 for electric. If we changed it, there would be 2,500 based on electric EDU usage and increase up to 1,273 based on total usage. A single EDU rate currently is $21.25. That's the base rate. If we base it on residential, that would go down to $635 and down to $1279 based on total. The rank, right?
I need to interrupt you, I'm sorry, but why would total customer use have less EDUs than just residential use?
Because the number of total usage is much greater than just residential. The rank, of course, 1 EDU is 1 EDU. You can see that 1 EDU comes at the 317th customer and the 84th customer in total. So how many people pay above that current amount and how many people pay below it? Total customer revenue is $16,282 on all scenarios. And then here what we did is we showed what the impacts to the various customers, larger customers, would be with this change of using usage. Now Vail, which currently pays $1,600 in electric base rates, would pay between either $6,000 or $4,000. This is on a monthly basis. The rec center would go from $21 to $162 or $112. Mountain Club would go from $63.75. They have several accounts, that's why that's not just one. But under the total, they would pay $526. The district would be increased to $1,297 under the total scenario. I think it was important to note that for the residential side, the 76th customer would pay approximately the same amount that they're paying now. And on the total use, the 61st customer would be paying approximately what they're paying now. And once again, the total customer's revenue remains the same.
Michael, for the condominium complexes, I know that Mountain Club has just 1 meter for, 40 units or something like that. Is that, I mean, what's normal? Is normally the condominium units have 1 meter, or is it normally 1 meter per residential unit?
Normally, you have 1 meter per unit.
Per residential unit, so all the other ones have like 40 or 60 or 100 meters.
However many they have. Like, the Meadows has 64 water meters, 64 electric meters.
Is Mountain Club the only one that just has a single meter for the 40 or
I
so?
don't know, I
units?
think the Lodge might for the electric.
Lodge has separate meters. I think that the Meadows has 1 propane meter
Right.
that they push out to all of their,
So it's not the, Mountain Club is the exception, but there are other exceptions.
Well, I you know, it just seems to me, well, maybe it all comes out in arithmetic anyway. I haven't done it because Mountain Club, if you use the total customer base, and it comes out to be $526 a month divided by 40 or whatever the number is, it's about $15, which is about 1 EDU per. So I guess it's about the same anyway. It comes out to be about the same. I just wanted to be sure that they're essentially paying 1 EDU per unit, assuming normal electric usage. And it looks like that's what it
Yeah,
comes out to
I
be.
think they have a little bit higher than normal. But
It's close.
Yeah. okay.
Yeah. That's one of the test cases to make sure.
Yeah.
In fact, that's how we originally started this until we got a little bit more sophisticated. We said, well, what would 40 units cost? You know, what would be an EDU for 40 units? And that's how we started establishing this mindset.
Yeah, and then my only other comment, I made this at the Finance Committee, I'll repeat it here, is that in the case of the Mountain Club, because of that unique circumstance, it's almost like having found a meter that wasn't recording properly. And it's not that I think that we should go back and back charge or anything like that. I'm just saying going forward, to me, it would make more sense to allow that $16,000 to rise by whatever it would be under the new scenario. Because it's like we've been, I don't know, to me it's more like a meter that wasn't recording properly than a change in policy like we might with commercial. It's not that much money overall, but.
Right. Are there other comments on electricity? Should we look at propane next and then take questions?
Well,
Sure.
I guess I do have a comment or a question, but
Okay.
I don't understand why the right-hand column would be, like, intellectually honest. And what I mean by that is equivalent dwelling unit. So shouldn't EDU-based calculations be the center column? Meaning we're trying to,
Well, but the thing is, we're trying to normalize everything to dwelling units, and we're trying to aggregate in the commercial units as well. So you either treat them separately, which is the way water operates, or you would say, well, why? It's all usage. So if we look at a range of usages, this other column says, what's the average monthly usage across all meters, regardless of whether they're commercial or residential? Because the distinguishing that way isn't necessarily meaningful for electricity. And then you say, well, this is the average, so the average is defined to be 1 dwelling unit. So it's a mathematical formula that doesn't discriminate based on who you are. It's purely usage.
I understand that.
Okay. So I think it is.
I guess my issue is calling them dwelling units if they're not really dwelling
Yeah, Alan Zapp, when we first talked about this several months ago, suggested we change that term. I know it's in the industry, that's what it's called, right? And so, but change the term to something else that's more accurate.
Well, you
One
can call it
of-
equivalent base
Customer
rates.
units or something.
Yeah, and one other term that's used in the industry is fixture unit. That's even more pronounced used in the unit, and that's not anything about commercial or residential. It's how much usage is a fixture unit, which is exactly what we're doing here.
Yeah.
A fixture unit in Kirkwood, if you don't have residential or commercial, anything at all, is the total customer, is the right-hand column.
Right, and I just remind people that some locations have more than 1 meter of the same type. And so we've segregated out, so 1 meter is going to be at a different base rate than the other meter because they have different usages, even though they're the same customer in the same location.
Propane follows the same format. A single EDU rate currently is $5.32, and it would be reduced to $2.19 or $3.51 under the two scenarios. The revenue, once again, is constant at $2,300. And once again, the Vail is impacted. Their rates would go from $133 to either $548 or $416. The district would go from paying one base rate, or several base rates, I guess 4 base rates, to up to $39 or $32. So these changes would result in a base rate decrease, under the scenario that we're looking here, for 90% of the customers under both scenarios. Staff is leaning more towards the total customer use base as a recommendation. We also like the decimal point, as I think it solves those rough edges.
One is, I think, you left the finance committee when we talked about this. Oh, no, you were there.
I was here.
You were there.
And the finance committee fully supports going in the EDU direction. I don't know that we got down to the difference between residential use and total customer use.
I don't think we
that was
talked
presented.
about it specifically.
I think the goal for this meeting at this point is to say, have we done enough work to present this in a public hearing, present the options, and have public feedback? And I think that's the question for today.
I certainly think
My
so.
answer would be yes.
Yeah.
I'll go along.
Okay.
Bob, I have one question on that.
Yeah.
In that, in the material that we would present, we would continue to, under the understanding that there's no increase in base rates. Now, are we at that point? Because I've heard several comments that we might want to increase our base rates and rates, and shouldn't that be done in one form?
Well, I think there are several discussion items to be held at the public hearing, but I would suggest that the default condition is the customer use EDU and that we're only changing the methodology, and we'll evaluate what the total income is as part of a future discussion. My rationale for that is changing 2 or more things at once makes it harder to understand, and the issues get confused. And as part of the planning process for propane, we could look at the base rate. But I would also imply that the total revenue collected would probably go up in the future by more than the CPI.
What's your view of that?
No, I agree. Taking them separately is great. But I think that the board has a good point that the base rates on propane, and we made a presentation at the last meeting that they're very low percentage of total revenue, and that should be looked at. But it doesn't have to be done at the same time. It could be done at a subsequent. We have to have a public hearing if we're going to change the rates anyway, and we can do it at that time.
Is there any comments from the audience?
I may be taking a bad position here, but I think you should do it combined. Why do 2 hearings to come out with an increased base rate? Make it one deal, explain why you're doing it, and get it done. Otherwise, this can drag on for a year or more. And you need the funds.
I hear you.
Well, so does that suggest we should take an extra month to figure out what we think the total revenue collected from propane base rates should be? I'm not taking a position, I'm just asking a question.
I get, sort of, I mean, do we have sufficient time between, well, I guess March or now, or March and July to go through both conversations?
We would have to adopt a rate change at our May meeting to give, allow 30-day posting notice for it to be effective on July 1st. Couldn't do it in June, it would be close in June, but it would have to be the May meeting. So if you have a public hearing in April to discuss the EDU, the methodology change, and a rate change, not only to do with the rate change on the increase in base rates, but the decrease in the fuel rates, you'd be presenting it all at once, as Judy recommends. And then in May, you'd have another public hearing. This would be like a second read and actually adopt the ordinance, which would be effective on July 1st. So that would be the time frame review. The only difference would be in March, you could do a separate public hearing that's only about, the EDU change. But I think you're talking about at least 2 public hearings to get this done.
The other thing we've discussed doing is in advance of public hearing, sending an email to customers for which we have emails, and just saying this is the before and after. For a scenario, this would be your before and after bill. So we've set up the systems to take the November bill and just say, this is what it would have looked like in the new system. This is what it is currently. So people will see what the effect is on that account individually. And part of that would be to encourage them to either provide written comments or come to the meeting.
So you'd have to send that out in March.
We'd want to send it out at least a week before.
So here's
Yeah.
the thing, is like, I mean, I think it's kind of clear to us that the propane base rate is probably lower than it should be.
Right.
But we also have talked about the bigger picture about all the base rates. What percentage, should they be a little bit more uniform in some way, or should it be a little bit more rational basis overall? And I don't think we have time to think all that through in these months. I mean, that's like all of next year, or a good part of next year, if we want to tackle that. So I guess I'd be okay with just tackling the propane one, but I'm not quite sure. I'm not sure what the rational basis for increasing it is. I know basically to cover the infrastructure costs. I just have no idea what the impact is. Does that make it from $5 to $25, or $5 to $6? I don't have any sense of scale on that.
Which is why I asked if 1 month we could figure it out or not.
Yeah.
So maybe a recommendation from staff is to hold an April and May public hearing and address the overall issues of both meetings. That would give staff enough time to give you definitive numbers on what it would be for an increase or to take care of the base rates for capital expenditures for propane, and allow us to finalize our EDU discussion as well.
So we finalize the EDU discussion and then just really address the propane base rate.
Right.
And why do we need 2 public hearings? I forget that reason.
Why? That's just a recommendation. You
Well,
can do it in one. I just
I would
recommend.
prefer to, the first reason is that if we're going to present it to the public for the first time, get their feedback and decide all in one meeting.
I see.
That doesn't really give you any chance to consider the feedback in any detail.
Right.
So the first public hearing is to gather all the data, and then the second one is to say, based on what we heard, this is the conclusions, and then to see whether we're prepared to move forward.
It's worked well in the past for us.
And so I think deciding today to have the first public hearing at the April meeting, I mean, that's what I would prefer. Is that?
Well, we're happy to keep on the schedule.
Yeah, and then we would also at that hearing for propane ask staff to sort of say, what are the future propane needs that need to be covered? And how would we do that? And what would that, if we covered them in the base rates, what would that mean? And whether we decide to include them or not, at least people know this is the EDU change and this is the possible future price. So we're not, so all the information's out there.
And just to be clear, with water, we're doing the center column, or are we doing the right column?
I recommend the right column.
But we're currently doing
Currently is the center.
the center column.
For water and wastewater.
Right.
But we can't change the water and wastewater without a more
Proposition
extensive
218.
process.
Yeah, and we're not ready to do that. We're still reconciling the usage numbers, because one of the problems is if somebody had a water leak for a month, their EDUs would go from 1 to 6 because they had a bad month.
Yeah.
And that's probably not what we want to do. So we're still cleaning data on water, so we really did not want to do that as
And
part
your
of this budget cycle.
thought is the right-hand column makes more sense?
Well, what I did is I've looked through all accounts and said before and after, and I don't want to create a shock to this system. What I want to do is right now, my feel is the large customers are being subsidized by the small homeowners. And so I want to adjust that, but I don't want to go crazy on that. And so I found that the total it made it feel more fair. Whereas treating high, just because you're a resident and you use a lot of electricity, doesn't make you different than an efficient commercial customer who uses less. So I just felt like the distinction on electricity, I just couldn't really warrant giving residential a special treatment. So the average across all customers to me just felt, it's easy to explain. There's no judgment involved. It's a formula. And it made, if you look at the increases, it just made them seem a little bit more palatable. Yeah. But I would encourage anybody, any of the board members who want to, if you want to look at all customers, they're sorted by usage or anyway. You can look at them. But I think one of the reasons why staff picked out these is they kind of represent. They give you a very good feel for it without looking at all of the data at once. So is there a motion is there any more discussion? Are we ready to make a motion?
I'll make a motion that we have a public hearing to consider equivalent fixture-based units or whatever we decide to call it in April.
Yeah, is there a second?
And propane total base rate collection.
Yeah, I'll second that motion.
Any other discussion? All in favor?
Aye.
Opposed? Okay, passes unanimously.
It'll be the double public hearing, the one in May too.
Yep.
Yeah, we could call a one in May as well.
Oh, okay.
But since we may be discussing electric rates as well, could I ask you to revise your motion to say EFUs and electric and propane rates? We might be a broader subject.
Sure.
Great.
And what you have in mind there is the reduction we're talking about? In
Yeah, I mean,
electricity
if we're going to
rates?
be discussing
Everything we
electric and
know.
propane rates.
We'll probably know more about the base rate and propane, but everything we know at that
Everything we
time
know.
could be then discussed.
So I would just like to make sure that we can put the agenda out as a broad
Right.
topic.
Okay. The rest of this is going to go considerably faster. 8D, discussion possible approval of resolution 1601 for delegated emergency contracting. This deferred from last month when it requires 4 votes to pass. Last month, couldn't do it. Okay, Michael?
Due to recent emergencies, I get to use my fire pictures. Due to recent emergencies in close proximity to Kirkwood, district staff has investigated how the district would comply with competitive bidding requirements in the law in the event of an emergency in Kirkwood or on the Out Valley project. Public utility district law states that the public works projects have to be competitively bid if they're over $15,000. The district would need to solicit bids from qualified and licensed contractors. Those must be based on district-approved specifications. They must be published. The notice inviting bids must be published 1 week in advance. Bids must be publicly opened, and then we have to choose the lowest cost responsive bidder. When purchasing any goods, same rules apply. The threshold is $10,000. These rules are workable in the normal course of business. We actually went through these rules when we, on an agenda topic as far as the track list is coming up. We went through these rules at that point. The Public Contract Code contains an exception from the normal competitive bidding requirements in an emergency by authorizing the public agency's governing board to delegate emergency contracting authority to the designated agency offer. The board of directors may delegate emergency contracting authority to the general manager by resolution or ordinance, and I've included Ordinance 1601 for your consideration. The board should consider and discuss this at a public hearing. It takes 4 out of 5 board members' A's to actually pass this, so this is an exception to the general majority rule. So an emergency is to repair or replace a public facility, take any directly related and immediate action required by such emergency, and procure the necessary equipment, services, and supplies required for that emergency. If I'm absent, I can delegate this authority over to the assistant manager to declare an emergency. District staff has to report this emergency and any actions taken within 14 days to the board in a meeting. I have to report the reasons that we declared an emergency, what the costs were, and then the board has to reaffirm that they want to continue the emergency or if they feel that that we've done sufficient action. District staff recommends that the board approve Resolution 1601, delegating emergency response authority to the general manager. And this was discussed at our last meeting, actually.
Any comments from the board? Okay. Any comments from the public? Okay, is there a motion to approve 1601 or any additional discussion?
I just have just one quick question, Michael. When you think back over the last X number of years, can you think of any particular event that would have triggered this?
Like the burning of the powerhouse? When the powerhouse burnt down?
Yeah.
The district took emergency action to begin construction and design of a new powerhouse. That was done the day after the powerhouse burnt down, actually.
That's right. Yeah. I guess the flooding that occurred back in the 90s sometime.
Yeah, that could be flooding a base camp way back in the early 90s could enact this. I could tell you lots of different scenarios, but those are the ones that come to mind.
Okay. I'd like to move adoption of resolution number 1601.
I'll second that.
Moved in second. Any further discussion? All in favor?
Aye.
Opposed? Okay, passes unanimously. All right. Move on to item 8E, presentation possible approval of the 2016 Out Valley Work Plan.
Yeah, so this is one of those items that you've seen before. This is the 2016 Out Valley Work Plan. Staff has completed the revision of the work plan for board review and approval. The approval means that we present this to the United States Forest Service. That's basically all we're doing. And then they go through the process of taking it through their specialists so that it can be approved. They approve the work subject to a meeting that we're going to have in June. We're taking this in-house and a cost-saving move. The plan describes what we plan to do on the Out Valley line on U.S. Forest Service lands. This plan is very general in nature, as we have not been able to see what the conditions are because we have 10 foot of snow out there. So the Forest Service realizes this, but what this does is it gives them the opportunity to get all their ducks in a row. They know generally what we're going to be doing, but then we actually have a meeting to discuss it. Things that I could see that would definitely be done is additional water bars on our roads and possibly on Forest Service roads, erosion control on both Forest Service and our roads, of course the vegetation management and hazardous tree removal. I think there's going to be some trees that have to be removed this year. Invasive weed monitoring, that's done by our specialists out of RCI, and improving the path along from 37 to the basically to the top of the hill there at the wine shack, just to improve the accessibility for inspections. This has been budgeted for, and staff recommends the approval of the 2016 work plan.
We
Okay.
discussed this in the operations committee, and the consensus was to approve it.
Okay.
How
Any,
does it compare with our work plan for last year?
Last year was much more specific. We did the work plan last year in June after the meeting. We actually held the meeting with the Forest Service and then did the work plan. This one is much more general, just stating the things that we anticipate doing. Besides that, it's very similar.
okay. Any other discussion, any comments? Okay.
I
Is there a
move we
motion?
adopt the plan as presented.
I'll second the motion.
Okay, moved and seconded. All in favor? Say aye.
Aye.
Opposed? Okay, passes unanimously. And we move on to 8F, presentation possible approval of proposal from Exponential Engineering to provide support and inspections of the Out Valley.
In your packets on page 187 is a proposal from Exponential Engineering to perform the Out Valley support services in 2016. Exponential has been working this for us for quite a while. What they would include in this is a summer visit during the 2016. They'd review and do an inspection of all of our underground and overhead. They'd work on the phone, the VoIP issue down at Cam Green. They'd work with us on the closing of the Cam Green breaker, and just do field work as they would normally do. They were hired last year for the same basic circumstances for a cost of $6,700. Staff recommends the approval of this contract for a total of $7,030.
Okay, any questions, discussion?
Did your committee,
Yeah, we recommend approving this also.
I mean, I think it's a great idea.
Does our phone work down there? Do have phone
We
service?
have received
Parts.
we have received parts. No, it doesn't work.
When will it work? Just, when will it work?
I think he has to program. It will work this summer when it comes out.
Okay, so-
I'll make the motion that we approve this contract as recommended by staff.
Is there a second?
I'll second the motion.
Moved and seconded. All in favor?
Aye.
Opposed? Okay, passes. And we move on to 8G, discussion and possible approval of payment to PG&E for services related to the Out Valley.
I'm going to pass out on this.
You said we're going to pass out on this?
Thank you. So the long-awaited bill from PG&E. District staff and RCI has been in many meetings working on the final payment amount. As you remember, a lot of those meetings happened in 2015, and then once we had come to some sort of an agreement, they asked us actually to hold and not pay the bill until 2016 for their accounting purposes. So here we are in 2016, and we receive a bill in the amount of $73,263, which I just handed out to you. We have been in meetings since then trying to determine why this bill went up so much, and it basically has not. They reissued a bill that's more in the form of $2,442,000, and some of their accounting is off of PG&E. So we've met with them. We are disputing one part of the bill, and that's a charge of ITCC on PG&E engineering services for the 115 line that they do not own. So the difference between what we've booked as a liability is $2,262,000 and what their current bill is of $2,442,000 is this engineering services and the ITCC that applies to that. In the colored graph that I showed you, that ITTC services is not included. This is a PG&E graph, by the way. Is not included in their graph, and now they've included it. So we've asked them, why would we be subject to ITCC on items that they don't own? All the rest of the ITCC charges are for the pole, the major pole that they do own, that we installed, and all the work at the Tiger Creek and Salt Spring substation. So we understand that portion. We just don't understand why ITCC would be applied to the engineering costs on items they don't own. Michelle has gone over this bill. She put a letter in your packet on page 189 recommending payment of the amount that we've actually booked. It's slightly less than the amount that we've booked, but it's very close. And I have also looked over this, and we have worked on this for quite a bit, and we are recommending payment in the amount of $2,243,228, which is slightly less than the amount that we have booked, as I mentioned, as a liability, and the amount that is reflected on the spreadsheet. But it is reflected in Michelle's letter and on the screen above. And I open up for questions or discussion.
Are there any questions?
Well, let's see, make this as diplomatic as possible. I personally don't think we should pay this until the other amount is resolved. So when this is paid, I'd love to get simultaneously a letter from PG&E saying all costs have been paid. Otherwise, honestly, this will go on and on and on. I mean, that's been the history.
Well, have you talked to them about this discrepancy, meaning ITCC? And what do they say?
In the spreadsheet that I passed out from
Which I'm having trouble understanding.
Sure. It took me months, so. But there is a comment under here. In the green section is actually what we, there is a question as to whether or not these need to be included in the ITCC and O&M charge due to the fact that this is a cost related to KMPUD owning the tap line. So I don't know what their final resolution will be, but we have brought up the question to the project manager and their administrator just as recently as last week.
Michael, wouldn't this item somehow be tied up in the discussions about the switch station and deeding back to them the 115 kV line? I mean, wouldn't that be when this whole ITCC tax associated with that line be resolved?
Yeah, because it,
I would take a different view, and that is, we should settle this now on the presumption we're going to own it and get out of the switch station. But you're right. In other words, if we don't build the switch station or get out of it, excuse me, maybe this is a more diplomatic word, finding a solution other than building the switch station, then yes, in 2018 or whatever the end of the period is, we have to revisit it. But I think we should try to settle this now without paying ITCC tax on those 3 poles, or I guess it's the whole overhead that we would own.
Yeah, and this is just to do with the engineering services for it,
Forecast.
which is not on their balance sheet, is it? I thought the ITCC tax was just on their balance sheet items, but anyway,
Your other point is...
I think with good reason, I don't completely trust PG&E's processes. And with so many people involved that we'll ever hear the end of this.
Well, since they're trying to collect money from us, not the other way around, we do hold all the cards in that sense. So letting them know, here's your check and this is the final payment, because according to our calculations, everything is now covered.
Yeah.
That's letting them know we consider it final.
the difference between what we're proposing to pay and what they're asking to pay is approximately $100,000. So that's what's in dispute, just to be clear on the dollar amount that we're talking about.
Which covers 2/3 of our desired capital expenses this year.
Would there be a solution where we approve paying half of it, and then the other half, when we get a note saying we've resolved it and we're not going to charge you the $127,000, $100,000? Let me say it a little better. Well, we're working with them to try and get out to find a solution other than building that switch station. I could make a good faith effort to send them $1 million plus, and just say the second $1 million or the remainder of this the amount that Michelle is recommending, we're happy to pay as soon as we get acknowledgement that this is the final bill or the final amount. Because I think the contract says that they determine the amount that we have to pay, right? So it's not like we can say it's the final bill. They can say, well, the contract says, here's the final bill.
Yeah, I can't remember what that agreement
I know that
says
the
exactly.
IA, the TFA on the IA specifically does not include ITCC in its calculation, which is all subject to, this is only an estimate, they can't be held to it, but it does not include, in fact, nowhere, we got out of this issue ages ago in our negotiations that engineering costs should not be charged to ITCC tax.
Well, I kind of, I like the idea of addressing this 127 now, and I think that, and I like the idea of Standish's idea of just putting closure to this thing with the assumption that we will have a different solution for the switch station. So I think that Bob's idea of making the payment, but with a letter, with us stating, this is it. And don't send us another bill.
What I would add on to that is we do want to, this is an amount we think is accurate according to our contracts. And, I don't want them to come back with late payments and anything else. And I also don't want, when we call their management up and say, we want to discuss alternatives to the switch statement, they would say, well, according to my accounts receivable, you owe us $1.25 million and you didn't pay your last bill. I'd rather be in a position of saying, we paid everything we owe you. You can investigate this other thing. Your own statement say it wasn't clear why you should charge us that. We're clean. We paid you on time. We paid you the same month you sent us a bill. Let's get the switch station resolved. I just think I don't think we're in a strong position with a multi-billion-dollar company by withholding $1 million or more on payment. I think we're better off taking Michelle's recommendation, just from a negotiating viewpoint, just from a business practice. If we disputed some of the elements in that total amount, then I would hold it back. But we're holding back only the portion that we feel is in dispute.
And being the lead negotiator with PG&E and having the lead, our tone with PG&E at this point is very positive, and we're working towards resolutions. And when we brought this up, it was very positive that they would, look into it and see what the resolutions would be. So withholding funds might set a different time.
I'm fine with that approach.
But with the letter.
Yeah.
Saying this is a final, we believe, in the
Yes.
proper language.
Thank you very much for this terrific project, and we're not paid in full. It's the congratulations.
This is about the
that
only
counts.
time I'm ever going to say this, but I just wonder what Donald Trump would do.
I think I know what he'd do. Well, I'd rather we move on. That's okay. So there's a motion to approve the payment?
With a letter saying this is the
Letter.
final amount.
And I'll run that letter through the board president.
Okay.
I'll make that motion.
All right, is there a second? I'll second it. Okay. All right, all in favor, say aye.
Aye.
Any opposed? Okay, I appreciate that. All right. That is item G. We'll move on to item H, an update regarding meetings with PG&E on the potential switch station.
Why don't you take the money down in the bag?
In 20s or hundreds. I think they're going to do away with hundreds someday. District continues to pursue a discussion with PG&E on issues remaining on the interconnection agreement. As you know, the district is concerned with the cost of ownership charge for the substation work done at Tiger Creek and Salt Springs, and the cost of and the need for building the substation. We have contacted PG&E several times on these issues, and they have responded that they are working on a counter proposal. We have not been pushing PG&E at this point, but we certainly can. We are hoping to have a meeting with PG&E to discuss our proposal letter that was sent out last year. And I've just had this on as a normal agenda topic. I don't have a huge update on it.
Okay. And why don't we move on to 8I, discussion and possible approval of bid award for the purchase of a trackless MT Series 6 for snow removal.
The heart of our snow removal service is our trackless snow blowers. For the past 14 years, the district has used these machines to clear snow from public property and from our customers. It's versatile enough to complete driveways and powerful enough for the sides of the roads. These machines have been a perfect fit for Kirkwood, and we have 5 machines. The age of the machines are becoming apparent, as all but one have been fully depreciated. Repairs are much more common, and during heavy snow, 1 or 2 can be down, which puts a strain on the level of service. With this in mind, the district went out to bid for a new trackless MT Series 6 Tier 3 with the Simplicity AC heating unit with less than 200 operating hours, a slightly used machine. The ad on page 193 in your packet appeared 6 times in the Tahoe Tribune and was sent out to known vendors in the area. Due to the popularity and the timing of this proposal, only one bid was received from Rosalind Service and Repair. The district is familiar with this vendor, and they currently perform all of the service which we cannot complete in-house on our existing fleet of trackless machines. And so you could see on the screen above that our newest machine is actually our T5, which is as of 2007. Our oldest machine is 15 years old. They have a depreciation life of 10 years. So I think it's high time that the district purchased an additional trackless. They've been a solid machine for us. Please note that this does not include a blower. So what you're looking at is a trackless, which is just the unit that the person sits in, the motor and everything. Several years ago, the district purchased a spare blower for redundancy purposes. If the board decides to approve this trackless, we would have 6 trackless machines and 6 blowers. This used machine is available now and would be funded out of the Snow Removal Reserve Fund, which has a current balance of $330,000. Cost and freight to Kirkwood tax comes to $122,410. Here's the copy of the quote. We just opened it, did the public hearing yesterday, but we didn't make it in the packets. So it's a known vendor, it's a known product. We have parts and supplies that deal with the repairs of this machine. We have the blower to go on the front of it. Staff recommends approval of this purchase.
Assume the capital operations committee.
We concur with the staff's recommendation.
This would be called T6.
Yeah, well, I mean, this is why we include depreciation in the snow removal rates, so,
Right.
appropriate use.
We're getting pretty good mileage out of these machines. I mean,
15 years.
yeah, and I think one of the reasons is we don't remove snow from anything that's not paved.
Right.
Makes a huge difference in the lifespan of one of these machines. So I'm prepared to move that we accept this bid as presented.
I'll second the motion.
Okay, is there any further discussion, comments from the audience? Okay, then all in favor?
Aye.
Opposed? Okay, passes.
Thank you. Our snow removal department will be very happy.
I think our snow removal customers will be even happier. Okay, we're moving on to J, discussion of possible approval of a proposal from Gabbert and Woods Structural Engineers for designing a roof over the powerhouse radiators.
When the powerhouse was built, the radiators were placed outside to dissipate the heat from the generators, and any snow that accumulated quickly melted off. And also was very helpful that there wasn't very little significant snowfall. So during normal operation, you can see that this is a winter picture. The generators are running and melted off the snow, and it worked just fine. This has definitely changed this year. With the snowfall, the radiator areas, and anyone that has been back there recently can see the impacts of the snow. This amount of snow makes the radiators and therefore the generators inoperable. The need is to get the snow from around the generators to a place that we can remove it effectively with equipment such as trackless. So the need is to get all that snow that is piled up to a place, piled up behind the radiators, to a place where we can actually remove it in front of the generators. We've accomplished with this by building a temporary structure to allow the generators to operate, but also to have snow storage on top and then shovel it into the area of the trackless. So I don't know, I know Bob has been over to see it. I don't know, Peter, you've seen most of it, but this is now basically a complete structure around all the cats and the Volvos. And it's a CDX plywood with pressure-treated wood, 4x4s. It's very sturdy. I think it'll actually do the job. The district is now currently in the process of painting it. It won't remain white. It's going to go black, so it looks like the radiators. The only difference would be is when you knock on it, it won't have that hollow sound. It'll sound like a piece of wood. And it now covers both the cats and the radiators. This is an effective near-term solution. Near-term meaning year 2 years, something like that. In the long term, staff would like to see a shed roof built over the radiators. Staff has contacted Gabbert and Woods, the original structural engineers for the powerhouse, for a proposal to design a shed roof. The idea would be to build a ledger off the powerhouse wall and support it with posts in front of the radiators, allowing for openings at the exhausts. The proposal is for $15,500, includes the design, the construction documents, and construction administration, that is assistance through construction. If this is approved, staff would initiate this work in the summer. So we would not initiate this work until the next budget is approved. So it is in our next year's capital plan. So we would initiate the design this summer with construction the following year for the cats and the following year after that for the Volvos. The price for this is, once again, $15,500. Our work would probably be initiated in mid-June or maybe June with payment in July. This is a stepped project, which will come back with further updates. I think it's a conservative approach. I think we have protection now, and staff recommends this approval.
Okay. Yeah, we reviewed this in the committee, and we also concur with the staff on this item. Pretty important that we be able to protect those radiators. Power up just 4 minutes, like we've done.
So I'd like to move approval of this proposal.
One question. So if we don't go forward with it, are we obligated to the construction administration portion, or is it? Okay.
Right.
Yeah.
It's a good question. So if we design it and then don't build it, we don't pay for work that was not complete.
And do you have a estimate for how much this would cost? I mean, I did go over there yesterday and looked at it. It looked pretty good, actually. They painted it, smelled of fresh paint. But do you have any white? Do you have any estimate for how much this would cost?
Just my own.
Yeah.
So nothing from Gabbard or anybody that, but myself, I budgeted in our budget $200,000 for this.
Okay. And last question is, what's the rationale for doing, the Volvos once summer and the cats the other?
Just to see how the cats, we can produce 3 megs out of the cat. I wanted to give us some time to see how the temporary structures worked during the winter. Maybe we don't have to do the Volvos. Maybe the temporary structures work. That just gives us flexibility. We could certainly do it all in one construction season. It might be cheaper to do it all in one construction season. I just budgeted it in a conservative fashion.
You made the motion, Aaron?
Yeah, I move that we approve this proposal from Gabbard and Woods Structural Engineers.
Second?
I'll second
Okay.
that.
Michael, I just have one other question. If at some point in the future we upgraded the cats from 1 meg to 2 meg, do we have to change the exhaust, the external exhaust system?
I don't believe so. Yeah. I don't believe you need.
So we don't need to plan future expansion into the shed roof?
Yeah, we certainly could check into that. We have the time to check into that. Given
I guess that may be my only question is, what does it look like if we expand capacity?
Right. Because we built the powerhouse with the pad ready to go for 2 meg. Does the 2 meg require a larger radiator?
Yeah, and this the shed impact there.
So is the thought that this would be sort of an extension off the existing building?
Actually, it would be a ledger. It would come down about 15 feet off the existing height of it, and then it would come down like this to the edge of the radiators here. So the powerhouse was built with a mezzanine in mind. The thought would be to, there's structural steel in that wall. Attached to that structural steel, a ledger plate across that, right below the lights, but above all of the exhaust mechanics. And then take that roof and go straight on through to the other side of the radiators with a roof that's designed to shed the snow, because we wanted to get it off there.
Right.
We don't want to keep it up there. And it would have openings for the exhaust stacks that are now there, keeping a good distance away from the exhaust stacks.
My last question, is there any scenario where you just have a shed above that existing structure? Meaning instead of a flat roof that you built with plywood, you'd have an angled roof? Would that solve the problem? Or would you still have a lot of snow between the radiators and the building?
Still have a lot of snow between the radiators and the building. Whether that builds up to be a problem, I don't know. Putting a slanted roof that's designed to shed the roof on the existing wood structure, I have to give it some thought. Right now it's designed, it's going to have a railing in the back so that we can actually go up there and remove the snow manually. So it's built, structurally sound so that we can. I'd have to give it some thought.
I'd appreciate if you would, just a $200,000 project like a hole in the head.
Okay, on that note, all in favor?
Aye.
Opposed? Okay, passes. All right, so move on to an update 8K on resolving harmonic issues.
In your packet, you'll find the board has asked for a plan from Vail as to how they plan to address the harmonics caused by the chair lift operations. We received a letter from Casey that's in your packet. I think that the letter states it well that they plan to address the power quality issue on chair 4. We've recently received some specifications for a filter that they'd like to install on chair 4. This list has been in existence since 1972. They are following through with their commitment to give us the information in advance so that we can take a look at it. And then once that filter is installed, they'll see what the impacts on the harmonics are and be able to better address the future plans for chairs 5 and 11. So I'm pleased with the work the staff did to help negotiate this, and I'll leave it, open it up for discussion.
Okay, any comments?
Great to see the progress.
Okay, maybe you could express our thanks to Casey for putting things in writing and moving forward. All right, so we move on now to the general manager's report.
Actually, performance report.
Oh, I'm sorry, performance report.
Randy's
I
already.
saw her running for the door and I said, what did I do wrong? Morning.
So if we start with the electric performance report for this month, you can see our total production, which was a combination of grid power and powerhouse power for the month, was 1.04 million kilowatt hours. And we metered approximately 870,000 kilowatt hours, putting us at a loss of 16% for the month. I would like to point out on the breakdown of the electric feeders that's on page 225 of your packet, there is a bit of a reversal this month on which of our feeders had the highest losses. And it actually was lifts this month, whereas traditionally in our monitoring of this, we've seen commercial be the highest. We're looking into this change, but in part, this comes because Chair 1 was reclassified in our billing system as a commercial meter. Even though it is a chairlift, it is on the commercial circuit. So we made that change this month, and we'll keep tracking to see if that trend continues.
So I have a question. So when I look at this on page 225, and look at the lift feeder, it's 6% of all the losses, of all the distribution system losses, but it's, losing 62,000 kilowatt hours on a base of 283 is a very large 20% or so loss. And what I'm wondering is, do we, because I know some of the distribution lines to the lifts we don't own, right? We declined to purchase those. But is the location of our meters such that we are absorbing some of the distribution line losses on lines that the resort owns?
Yes. It is.
So all of the line loss on 2, 3, and 4, we absorb all the way from to the meters that are housed in the lift shed.
And the reason we don't address this is because of the cost of a meter. It's a very high cost of a meter.
Yeah, we estimated it was like $48,000 to put meters down at the base, and we felt that the payback was very tough on that. We also asked what the volume of loss would be on that line, and that's a hard question because you don't know what the conditions are. But David said that somewhere between 1 to 3% could be anticipated for the loss.
Well, there's something causing 20% loss right now.
Right.
So I don't know if there's a way to check that, with our temporary equipment that you can attach to lines and so on, but just to see if we're absorbing a lot of, during heavy use of the lifts, if we're absorbing a lot of that, a lot of money.
We can definitely check each of our meters. The line loss itself would be more of a subtractive calculation, but we are continuing on the checking meters program because of, we hope to find large culprits in that.
Brandy, are these loss calculations correct? Meaning, for example, feeder 2 lifts, if we lost 62,000 on 283,000, that's more like 22%, not 6%.
That's right. These percentages are a percent of our total.
Oh.
And I did it that way so that we could see the breakdown of, the distribution system versus the out valley. But that I can definitely add in a column on to show that differently.
So you said percentage of invalid, 22%.
Yeah, I'm just taking the,
I'll update the form for next month.
I think it's an issue that eventually we're going to have to address. That old line. They're going to be addressing whether they want to, if they want to upgrade the lift or put anything else back there. The feeder line.
what if we could rent a meter and charge them the cost?
We have not found any meters that would be able to be temporarily installed. We did look into that, because a separate cabinet and enclosure has to be built.
Okay, why don't we?
Okay. If we take a look at propane, we had another high usage month in propane. We had a production of 3.7 million cubic feet, of which we metered 3.6 million. Our loss for the month was 3%, bringing our total for the year to 2%, which is right on track with what we were hoping to see for propane. If we move on to water, we had a production of 1.7 million gallons, and we metered 1.6 million gallons. So the loss for the month was 4%. I would like to note that we did have an inventory adjustment, meaning that we pumped out of our wells 109,000 gallons that are stored in our tanks that weren't metered, but that was included in that calculation. Our total loss for the year stands at 10% for this month. And then finally, if we move on to wastewater, our influent meter at the wastewater treatment plant measured 1.8 million gallons. We metered 1.6 million gallons at our customers' locations. Our loss was 12% for the month, and this does make sense, seeing that we did have quite a bit of water flowing through the valley, rain events. Our loss for the year is at 15% for wastewater. and I'll be happy to answer any questions.
Any questions?
Would it make sense on the lifts to do a payback calculation, i.e. what a meter would cost, what we think we would generate in additional kilowatt hour sales, i.e. selling the line losses to the customer, and how many years, what the payback would be?
We actually have done that. I don't have the figures off the top, but we'll present that.
And the commercial losses are high because of the same issues, which is old lines and meters at the commercial premises. Is that your feeling?
I suspect that our losses are high on commercial and lifts because of all of the CT'd meters. There's a potential for error in the CT and the meter and the wiring, and that's what we're trying to go through right now and get a good comparison with our temporary meter.
Our biggest, the things that we've really found are things like meters and CTs, and as you're aware, at Mountain Club and other places, those have been the biggest impacts of doing things with meters. And then are certain lifts are on commercial and vice versa, aren't they?
For the most part, other than Chair 1, the lifts are on the lift circuit. All of the Timber Creek facilities, including the restaurant, are on the lift facility as well. And then snowmaking pumps for the lake are on the residential. So we've got a little...
So there's a little bit of everything. Chair 1 is actually on commercial.
Chair 1's on commercial.
The sprung structures are actually on lifts,
Mhm.
and the snowmaking is actually on residential.
Just the pumps at the lake.
The pumps, so just little things.
Might consider changing the names.
We thought about it.
Miscellaneous 1, 2, and 3.
Mud, 1, 2, 3.
Mud.
Okay, thank you very much, Randy. Okay. We ready for the general managers?
Yes. As the board is aware, the required 10-year review of the specific plan, which is paid jointly by Kirkwood Resort Development and Vail, has been completed and distributed to the community. The planning committee has taken the lead on gathering committee and community comments. The direction is to pass these comments on to TriTac and write up the district review comments for distribution to TriTac. This public review process has been discussed in the last 2 district newsletters. At the request of the district, the March TriTac meeting has been moved to March 11th to allow for greater Kirkwood participation. So with that, I possibly Dr. Rickard would like to make some comments.
Yeah, we reviewed this fairly extensively at our committee meeting, and the largest part of the discussion, which I think was appropriate, was simply to say that we're playing 2 roles here. One is as a conduit for communication between those who are interested in this topic and TriTac, the counties. And that's what's in the packet, is a compilation of comments that have been sent from community members to Michael, also from committee members to Michael, on the entire document. But that the document that Michael will author will really only address those issues relevant to the district's concerns, which would be around housing, emergency access, our provision of infrastructure in accordance with the specific plan, those kinds of things, water quality. So I think Michael will be authoring that and sending that to TriTac as a district's contribution.
So just to be clear, you would be sending in 2 responses, one from the district and one the general. Is that what you...
Yeah, they would be attached to the letter stating these are the comments that we received from these, and here are the district's
And
comments.
here are the official district.
So I think that what would be ideal is that each individual's comments be attached as they came in. This is a compilation, which organizes them somewhat, and then there's the district's own comments.
So I read through the document. I thought it was an excellent compilation of issues. One question I would ask is, just so the public knows that we're not here as an advocacy organization, is there any merit to considering like the submittal of everybody else's comments maybe being done by one of the HOAs or somebody else serving that? I mean, we could help them. Obviously, we could give it to them, but does it make sense to have that come from a different organization rather than us saying as a service to our customers we compile them?
Well, I mean, but what we've been talking about in the committees is what is the future role of the PUD here in putting out communication
Right.
to the residents of the valley, but also with that, we would get communication from them. So I think this is part of that process, in my mind, that I don't see why we would send it out to
Okay.
another entity and let them submit it when we receive it.
Okay.
I mean, I do think,
Yeah.
because it is a sensitive thing, I think we do have to be clear that we're sending this as our role as an ex officio member of TriTac to facilitate communications between the Kirkwood community and TriTac.
Mhm.
That's what this is.
Right.
This is the district's own comments.
I guess my question is
That makes sense.
whether we could inspire more comments from the community like we did on the parking lot, school site parking lot thing. I say that because, I know that we do a lot of work on the newsletter, both electronically and paper. And I find that a lot of people don't read it, and it seems to me that our newsletters encourage and comment are maybe not as effective as what we did with the school site last year.
Yeah, it's my experience with email is it can only serve one purpose. So if it's a newsletter, the purpose is general information. It isn't a call to action.
Right.
And so if we wanted to get more,
I agree with that.
more comments on the civic plan, then using the same thing we did with the parking lot, which was to say, this is the district's position on the parking lot, our concerns. If you agree with it, click here. If you have other concerns, your own, we will forward them if you write them in this spot. Then I would expect a similar level of comments.
Do you think that's appropriate or not?
Appropriate one, but I would warn that when we go out for public comment, we get great response because they're great issues. I don't know what the upside here of commenting on the 10-year review where TriTac is just lukewarm on getting comments on it anyway. I don't know what it's going to change. Looking for comments sake is one thing, but a call to action, I think you only have so many bullets and you're done.
Mhm.
And this might not be something that we want to. We're going to have a customer survey that comes out. We want good participation there. I don't want to flood the market.
Well, and the thing is that to comment on the 10-year review means you've got to read the 10-year review.
Which is 65 pages long.
And I doubt that too many people, I mean, there will be some, and by the way, I assume that some comments are going directly into the counties that we're not seeing to TriTac. I'm not sure if that's the case.
Michael, I know this was done before you changed the meeting, but the meeting date needs to be changed on this. Probably doesn't matter at this point.
Any audience comments? Okay.
Well, I guess given what you just said, I don't feel strongly about doing what we did for the school site.
I think we should save it for something that we're passionate about.
And we probably don't have enough time at this juncture anyway. It was going to be reviewed by TriTac on the 11th of March. Wouldn't give anyone the time to get something out and everything else.
Okay. And we move on then?
Caltrain's claim, the district has filed a claim to recover $377,000 from Caltrans for deviating from approved plans related to the Out Valley Trench located on the Carson Spur. Caltrans recently rejected our claim, stating that it was filed after 1 year completion of the work. In your packet, please find the district's response stating that the 1 year deadline applies to once we receive damages or once we've actually made payment for said work. Staff will keep the board informed on that claim. These pictures illustrate the amount of snow encountered along the Out Valley corridor during a normal snow year. You can see that our operator there is touching the tip of one of the snow poles. It's a 10-foot snow pole, and he's touching the tip. We've had to add extenders onto our poles to go up another 10 feet in certain location for safety and locating purposes. This summer we'll be adding additional poles to many of the cabinets so that we can find them in an average year. We have also have GPS coordinates and omniballs in each of our sectionalized cabinets. Even down at KM Green, which is lower in elevation, 4 foot of snow is collected, and district staff has spent several days digging out the facility out. And you can see how we've had to dig down into the gates and then create easy access to the control building and then to our facilities and the platforms on each of the facilities. Quite a contrast from last January, as this slide indicates, which was taken on the same day, just January 27th, 2015 and 16, between an average year and no snow year. Year-to-date snowfall as compared to total snowfall from previous years. On the far right, you can see that we've received 296 inches, which compares well to the total snowfall received over the last several years. And year-to-date, we compare even better. This is the year-to-date numbers through February 12th of each of the last 6 years. Not only the amount of snowfall, but the number of 3-inch or more storms falls have been very impressive. Year-to-date compared to year-to-date from previous years, the number of storms keeps the snow fresh and the skier reports positive, but for you and me, it also costs as much for the district to remove 3 inches of snow as it does a foot of snow or 18 inches of snow. So the number of snowfalls is very important. And so you could see that over the years, only 2010-11, the monster year, has fully had many more snowfall days than we did have so far this year. So I think those are important items. Recently, staff has been concentrating on getting the district's vehicles fleet in shape. The district has 10 vehicles to transport and assist staff in their efforts. This isn't something that we talk about a lot. I just wanted to bring it up as an information item. Repairs are underway to get the fleet back to par. At this point, thanks to the donation from Alpine County, staff feels that we have adequate number of vehicles. So you can see that certain vehicles have had repairs done, such as the GMC Sierra. Other vehicles, such as the service truck, that's the truck with the winch on it, needs considerable work, and we'll be spending some money to keep our fleet up to shape. But overall, we have gotten the Ford Expedition and the utility truck lately from Alpine County, and thanks to that, I think we have sufficient vehicles. We just need to spend the money to keep them going. Recently, Amador County supervisors held a recap meeting from the Butte fire, where area residents met with responding agency as to what went right and wrong during the fire. Staff thought it was extremely interesting that the lack of communication was a number one concern when asked, when residents were asked what the concerns were during the fire, real-time fire information and updates scored number one as a major area of concern, followed by power. Remember, they were out of power for a week. And then followed that by official communication from Amador County as being a close third. So I thought that was interesting that the two of the major incidences were a lack of communication during a disaster. And I think it kind of plays well and is a learning for the district to continue our communications and outreach to our community, because that's number one issue is people want to know what's going on, especially during an emergency.
So see with that, do we still have that one call system or whatever? We still have that?
Well, we have a...
I can't remember what we're using now.
Yeah,
Yeah.
it's there. And then you can sign up for either email, text, or voice, or all three for notifications.
Right.
We just haven't had to use it very much, I guess.
Right, and we, in the summer we use it more. We actually tested it this last summer during power outages for different areas and water outages. I'd like to use it more in that case where you don't really know if you're just talking to a blank audience or not, because you don't get much responses out of it. But it's good to be able to send it out there and to let people know that their water might be out for a short period of time. Recently, the Caples Ecological Restoration Project has been approved and will begin this summer. I will distribute the full content of the order and post it on the website. This project is a prescribed burn north of Kirkwood in the area that you can see here, and this is the Kirkwood area here. This project area will include prescribed burns, and they start in 2017. This year they're going to do perimeter tracking, hand piling of dead debris, and but we will have a major prescribed burn in the Kirkwood area starting in 2017. The district did comment during the public hearing process on the safety, on fire safety, and you'll be able to see the U.S. Forest Service's response in this document. We also commented on the heavy smoke impacts that could be related to Kirkwood and the impacts to Highway 88. So I think they adjusted their plans slightly due to the district's concerns, but the project is moving ahead. I think it's a total of a 5-year project, but next year it will just be hand trimming, and the burns will start in 2017.
A lot of smoke.
And that concludes my general manager's report.
Okay, thank you. We have the operations report. We sensed you were testing the garage door during the meeting.
Please excuse my exit. We had a child pull a pull station at Sun Meadows. So set the alarm off, and you guys went out there and made some noise and reset the alarm. For water operations, the aquifer level is doing quite well. It's on page 240 of the board's packet. For the month of January, we used 1.7 million gallons of water, which is about what we expect with the crowds being here. And I'm pleased to let you know that well 4 or 5 averages around 141, and last year at this time it was averaging around 117. So we're about 24 feet better than last year, and I think that's through the district's conservation practices starting the year with more water in that aquifer. Further, well 2 is holding steady at 26. It seems to be the workhorse for us during the wintertime. And we will continue to aggressively watch our performance levels for all our wells as well as our aquifer levels to get us through the balance of the season. One thing I will note on the bottom left corner of that page of the aquifer level water pumped and water treated sheet is that the the depth sounding. We haven't actually been out to the wellhead 405. It's been buried under snow for about a month and a half, and we hope to get out there this week and just do an actual sounding to make sure there's no discrepancy between the telemetry equipment we have. So we'll do a field observation on that. For the CAL FIRE grant, unless there's any questions about water operations, last month we submitted a grant request to the California Department of Forest and Fire Protection. It's called an SRA FPF grant, and essentially we were looking to solicit funds to support our chipping program here during the summertime. The total amount for the grant is around $56,000, and which would include about $15,000 for equipment. The equipment would be, for example, a landscape trailer that we could chip the material, maybe not back onto people's properties, but put it in a trailer and move that around the valley where it might be needed. Additional chainsaws, leaf blowers, rakes, brooms, and of course personal protective equipment. The grant would, if awarded, would allow us to perform the service to the community from May 15th through October 31st, with the completion of the grant December 31st, 2016. Unfortunately, it wasn't a multiple-year grant. It was just a one-time shot. But since I submitted the grant, what's in the board's packet is just the cover sheet, essentially. It's actually a pretty lengthy grant. But they have received it. They've actually asked me for a couple of different additional items, and so I'll make sure the board and the committees are updated as the progress of the grant. And hopefully we get awarded this grant to continue our efforts with defensible space chipping for the community. Moving on to wastewater, on page 245 of the board's packet is the snapshot of the plant, and the only yellow item is an aeration blower that was faulting out in November, December, and has since stopped. We've checked the blower and actually did a service on it, so in all reality, right now, everything is green at this very moment. But we'll continue to perform preventative maintenance and keep an eye on our high core and our centrifuge, which is our Achilles heels for the plant. The high core is the device that takes some of the heavier material, debris that comes into the plant, separates them. There is a backup to that system, but it's quite messy and time-consuming to maintain and operate. And then the other device is the centrifuge. Again, it's for pulling the heavy solids from our process, and it's just an ongoing I don't want to say maintaining, but it's just, we have to kind of baby the machine. It's a centrifuge, so it's spinning, and if you don't properly clear the centrifuge after you use it, it'll create a cake or debris on the drum, and then the drum becomes imbalanced, it faults out. So again, it's just part of the process that we have to be very careful with to make sure it continues to work properly. The last time we had a full service on it was about 3 years ago, and so after we get through this winter season, we may consider having somebody come up and just do a quick evaluation to make sure it's working properly. And so far, almost 2 3/4 years later, with new membranes, have been performing extremely well. So the TMP pressures for the actual process is doing quite well. So again, we'll go through the committees and the board to let you know how the performance is doing as we move along. And that's about it for water or wastewater, unless there's any questions from the board. And a lot of this was already covered in operation, so I'm just skimming the surface for you.
So if any of the board members would like a tour of the wastewater treatment plant in full operation, please come over. It's a different experience than summer operation. Yes, a little more odorous.
Our basins are a little more full. On January 30th at about 11:40 a.m., I got a very frantic phone call from Dave Myers, the Vice President of Operations for the resort, as well as Brian Bigley, who's one of their directors for the Valley Services, saying we're flooding. The The road to the East Meadows has 2 to 3 feet of water in it. It's starting to seep into base camp. We need help. Can you send equipment and personnel down to help us out? Our district staff had just completed the snow removal activities for the day, and so we sent our field manager, Dave Waddle, and the assistant manager, Joe Pellerin, down with equipment to help Mike Nicolai, who works for the ski resort, try to find a path for the water that, as you can see in the picture there, to exit from Kirkwood Meadows Drive near the tennis court area and Red Cliffs parking lot. Luckily, their efforts were successful. In that picture there, you'll see the loader to the left. That loader actually pushed down, and you can see the trench that it made today if you went out there. It's about 25, 30 feet off pavement edge. And as our operator driving our 950 loader did that, he said the whole back end started pitching and heaving because there was so much water pressure before he was able to release the water. So definitely a problem in that area. But after they punched holes through, they were able to clear it out and open up the road again. On the other side, the base camp side, again, the water was billowing out from the bridge area and actually seeping over into the creekside buildings. So units 33, 34, and 35 were getting water, half inch, 1 inch of water on the first floor, seeping in through the sliding glass of the creekside of the building. And as we discussed in operations, this is not an unusual occurrence. It's happened in years past, and the creek was actually changed and modified to kind of address this. But this is the first time we've had this kind of flooding in a while. When I received that phone call, of course, I contacted the general manager and staff to try to assist the resort. But I also made a call to the undersheriff, who's the coordinator for the Office of Emergency Services for the county. That resource triggers additional manpower, equipment, funding to deal with any type of natural disaster. And so on my way to Kirkwood, I actually learned of a meeting at the Eastern Alpine County Woodford's Fire Station and went to the meeting to find out that there was flooding in Bear Valley. But I informed them also, hey, we've got flooding at Kirkwood. I may need additional resources from the county of Kirkwood. Decision was made to retain the resources on this side of Eastern Alpine County for use at Kirkwood if needed, and some of those resources could have been the CAL FIRE hand crew from Peddler Hill, crew of 45 people that could come up and do sandbag work or whatever we needed them to do. Luckily, none of that was needed, but it was good coordination with the undersheriff, the Eastern Alpine County Fire Department, as well as the county, and I understand Terry Woodrow was also involved with that as well, just to make sure that Kirkwood needed, if there was a need at Kirkwood, they were able to help and respond immediately, so we appreciate those efforts. And something, as Michael indicated with the fires, the communication is really the key when there's an emergency or disaster. And so, for me, all the phone numbers worked. Dispatch was very good about communicating. Dispatch, meaning Douglas County Communications Center Dispatch, was very good about communicating where people were, how to get a hold of them, and then what additional resources were on standby if we needed them. So that worked out really well.
Further comment on that, Planning Committee and others have discussed the district's role in the valley. In 1996, the district took the lead and in a project to widen and reinforce two stream areas that were flooded almost every year during heavy storms. That was at Base Camp and at Renwick. And to my knowledge, this is the first time Base Camp has flooded since the district's efforts to widen and improve that channel. So just to put up the flag for the district for a moment. But we went out of our boundaries at that point as a government agency and did something for the community. And it's last 20 years, and I believe if this was an extraordinary set of circumstances that caused this flooding.
So one other question, so our Out Valley conduit goes right through the flood area. Was there any water intrusion into that?
That's still buried, but not that we've seen. We'll check our sectionalizing cabinets. It's all sectionalizing cabinets there, and we'll check our fiber vaults.
And further along supporting the community, the cause of the problem basically corrected itself. The water started flowing the correct way, but it still created the problem at base camp. They were still getting flooding, so the fire department loaned the homeowners in the units 33, 34, and 35 maybe 25, 30 sandbags to help them try to prevent the water from continuing to seep in and go pump out. And the two homeowners that were there were very grateful to have the support from the community, or from the fire department and the district for that. They have since been doing repairs and drying out their units. I tried to retrieve our sandbags, but unfortunately they were frozen to the ground, so we'll get those in May. But again, I think it's just another way that the district can help the community and the homeowners. And unless there's any other questions about the flood, I'll move on to my last topic.
One question, you said all your phone numbers worked. Do we have a process of, say, annually checking those phone numbers? Or would that make sense?
We do, and with the construction of the Out Valley line, Sandy McKay has put together a master emergency contact list. So for in-house, we definitely have a system that's in place. For the counties, for Alpine County, they do an annual review of their emergency action plan, and that's actually in the process right now, being reviewed, revised, and updated. For Amador, I'm not so sure, and that's something I should probably check on.
When do we do it? Do we do it in the fall when the season starts?
Typically in the fall is when we've been doing it for ours, just getting that build up for the season. But for fire, it's usually April, May, when all the fire chiefs start emailing all the radio frequencies, contacts, updating cell phones, and so forth.
Thank you.
Final item, and I'm not sure if any of the board members were up here last weekend, and hopefully they weren't part of this. As you know, the ice box on Highway 8, just west of the Cables Lake Spillway entrance, and of course east of Kirkwood Cross Country Center, is a notorious spot for icing over. You'll have dry pavement all the way up from state line to an icy area that just creates havoc. The report is that a single female was driving west on Highway 88, got into the ice box at a high rate of speed, decided to use her emergency brake to slow herself down as well as her front brakes, which immediately caused her to spin out. Bystanders behind her, or vehicle behind her, slowed down, stopped to give her aid. And with those two cars in that area, it created a 15-car pileup, which luckily only resulted in minor injuries, but there were about 45 people standing around their vehicles. And as you can see from the pictures, it was a mess. We had 3 vehicles on their sides. We had, of course, Alpine County, 4 of our volunteers, our engine, our ambulance, Amador Fire Protection District, Lake Valley Fire Protection District, CalStar, CareFlight, CHP, Caltrans, probably over 15 emergency vehicles there, aircraft hovering around taking pictures, and the road was closed for 3 hours. This has been a problem area and something that me as the fire chief, as well as some of the CHP officers have asked Caltrans to take a look at and maybe create a better way to do signage or a flashing sign. And I noticed this morning when I came up that they actually put a reader board that you normally see down by the chain control up saying slow ice. So, yeah, and there's no ice. So, again, I just letting the board know that we were out there taking care of business, but also probably a good thing to pass on to the community. It's just a dangerous spot. And this is probably at least our 4th, if not 5th accident in that area this season that we responded to. So,
And that area is east of the entrance to the parking lot for the dam?
This side of the parking lot to the dam, so it would be west.
I'm sorry, west.
Yes, sir.
the district plans to write a letter to Caltrans talking about the signage. If you go through that, traveling this way, there's a 45-mile-an-hour speed limit sign right before you get to the speed. And then 20 feet later, there's a icy sign, and then 20 feet after that, there's a 30-mile-per-hour. It makes no sense, the sign is going into that corner. So we're going to write a letter, put it on fire department letterhead and get it out to them, and make contact with Reynolds and Steve and people that can have an impact.
And that's all I have to report on, unless there's questions from the board.
Not seeing any questions. Thank you very much.
Yes, sir.
All right, standing committee reports. Start with finance.
We had a meeting earlier this week, we covered the first two items on the board agenda, which are district financials and budget, pretty much similar presentations. We also spent a fair amount of time discussing the equivalent dwelling unit base rate strategy, which we talked about today. And we're halfway through self-assessment of our performance. We appreciate your comments when you can, as well as one other. And then finally, Eric, do you want to talk about what was discussed on the rate strategy principles?
Yeah, there were 4 items. One was an update on the line of credit application. We got we considered a very poor proposal back from Bank of West, right? And so Michael is going to submit a different kind of an application for a lower amount, rather than a jump from $250,000. This letter from the bank was for $3 million and had lots of conditions to it. So I think you're going to submit something for $1 million instead, right? And forget the collateral business. And then we talked about cushion of credit. Remained very supportive of that approach, and that led to a discussion of how much money we should have in operating reserve and capital reserve. And although there was no conclusion on that or recommendation, I think that after some discussion, I think we kind of probably agree that the amount that's in our operating reserve could be a little bit offset, at least, by whatever may be in the cushion of credit.
Good. Planning?
Planning. Agenda up here. We went through the 10-year review, which we've gone through. We went through some follow-up actions from the meetings with the county officials. Michael is meeting with Casey and with Nate to see if they can come to a clear and articulate meeting of the minds on what a revised housing ordinance might be. And Michael's taking some actions and just informal discussions with the planners and supervisors regarding our role with mitigation measures, and also as an ex officio member of TriTac. And we did suggest that Michael have a conversation with you, Bob, to see if you think that it would be appropriate to have the role of ex officio member, that discussion at a board meeting, because there's some discussion about whether or not Michael, as our delegate, should be a voting member or not, and there's some pros and cons to that. We talked about the capital plan, and then we are developing the next customer satisfaction survey. And Cheryl Stern has done a great job of drafting that. I think we're happy with the content. We're going to mirror the content from last time as much as we can. But we think we want to shorten it, mostly through formatting, not so many clicks through so many pages. And Cheryl is currently checking on SurveyMonkey capabilities for that purpose. And Jeff or Judy, did I miss anything?
No, I think you covered it.
Okay, good. Operations?
I think we covered pretty much everything during the meeting, don't you, Jeff?
Okay. On personnel, we met yesterday, and I feel like it's my job to explain.
Thank you.
The display on the wall. So those, we've come up with standardized uniforms to wear, obviously, at appropriate times by the staff, and so those are going to be issued to staff and they're returned if the staff is no longer working here, but those are the ones selected. There was a discussion among the fashion consultants at the meeting about possible changes the next time we order, but those are it for now. We also talked about staff appreciation. There are regular events that happen, and encouraged Michael to have board participation. The next one is the Friday before the next board meeting, and there'll be a luncheon, and so I'd like to extend an invitation to who's ever here to attend and spend time with the staff.
Is it free lunch?
There's no such thing as a free lunch, but you don't need to bring your payment. We also talked about trying to get feedback on employee satisfaction, and discussed various ways we might try to do that going forward. And then the other thing that we discussed, which I'll mention here, is having succession planning in place. So Michael started to present a plan for that, which will get refined and then presented to the whole board. And then we also discussed the general manager contract. Michael's contract runs out at the end of this year, and that will be an item for discussion at our closed session as well. And that was the personnel. So we move on to general discussion. Is there any item a board member wants to bring up, or community member?
I would just ask you that you put these documents in a box, if you wouldn't mind. So we don't have to hold on to paper.
Okay, so with that, I'd like to adjourn the public meeting to go into a private session, a closed session, to discuss the general manager evaluation.